to one another in this partnership. And when we set out to write this book a little over a year ago, it was with the appreciation that quite a bit of work had been done in the gender space and in the general diversity space, but that it hadn't been put together in one place. And we were really excited to dive in and look at the literature and look at the evidence around the benefits, the financial benefits of gender finance and diversity finance, and also what the social impact could be from a full potential paradigm as Patience described in that quote. And we're really excited that our theory of change has developed and that we've seen such consistency across the sector in the power of diversity. So just to get us started, get my slides moving. So what we found in the XX Edge is that when women make financial decisions across all asset classes, all capital markets, it leads to higher returns for individual investors and greater benefits and economic growth for everybody. So, and just to make it clear that we were looking at the impact of women as financial decision makers, but we were really comparing male-only financial decision-making teams to gender diverse teams. And this played out, and accelerated performance played out across public equity, private equity, fund managers, real estate, loan recipients, entrepreneurs. So it was really amazing to see that anywhere that there was published literature, gender diversity outperformed. And we started thinking about what was the explanation for that, because it was certainly observational, but what was the rationale why this would be true? And I think this is true for gender diversity, but certainly is true when you're looking at diversity more broadly, that when you bring together different types of people to make decisions, that you're filling gaps, you're identifying, you fill in other people's blind spots. But in particular, what women, we believe, the traits that women more commonly have that are particularly relevant to financial decision-making are they tend to be more collaborative. They tend to be more risk aware, which means they're willing to take risks, but they analyze risk differently. And they also tend to have more of their eye on the long view and less willing to sacrifice long-term outcomes for short-term gains. And I want to once again stress that we're looking at bell-shaped curves. When we talk about traits among different groups of people, that individuals can be, a man can certainly have those characteristics, and there are plenty of women who don't. But that in general, what the literature shows us is that women tend to have those qualities of being more collaborative, more risk aware, and that they're more interested in the long-term outcomes. There are also some contextual reasons why we believe that women, that gender diversity outperforms. Patience, why don't you take it over?
Sounds good. Thank you, Ruth. And once again, thank you for being here with us. In addition to the traits that Ruth just, gave us a view of, is the context that we also noticed in all of our research. And this has traditionally been called, women are victims to whatever it is, whether it's a dislocation or a disruption. We prefer to call it proximity to those challenges. In most instances, women have proximity to challenges, and that proximity gives them a way of viewing solutions or even coming up with solutions that is different. And here, once again, we're going to harken back to 2020, a common lived experience among us all. Think of the nurses who make up globally more than 70% of the world's healthcare staff. It is women who are presenting that line between us and more calamity. Our view is you have 70% of women as nursing staff, but you only have a 30% representation of women in leadership, in those decision-making seats. And in the decision-making seats that are making asset allocation decisions, even fewer women. And that's a missed opportunity. Similarly, think of teaching staff You have a lot more women who are proximate to the challenges that we have in education, yet we have fewer women in the decision-making seats. Today, we're all talking about food security, the fact that supply chains are compromised with conflict going on in Eastern Europe. We have food security issues globally. Well, think about the fact that in some regions of the world, more than 50% of small-scale farmers who are feeding people are actually women. But women are not necessarily considered, or their views are not included when we are trying to solve climate change issues, for instance, both supply side and demand side climate change issues. The other part that we think is contextual is the fact that you have so much more talent that is just not being leveraged. So gender diversity outperforms male-only teams, yet we just have quite a number of teams that are represented with male-only teams, and you have quite a bit of talent that's left out of the room. So one of the things that we talked about, and Ruth, if we could move to the evidence is clear slide. The evidence is clear. Current dislocations and disruptions are pointing to the fact that we do need to employ new strategies, and that there are actually material risks to not doing things differently, to not embracing the opportunity of doing things differently. The next slide, please, Ruth. And what is some of that data that we looked at in this book? And this book is extensive in data. It is almost too much data coming at people, but we believe this was important to really nail the point that we're trying to make. We came across all kinds of data, but these are some of the key data points that we would like to share with you today. We know that gender-inclusive teams are 21% more likely to outperform male-only teams. This is an interesting one. Most organizations do not have female CFOs, but there's data that shows that when a female CFO takes over the financial management of companies, you will see a 6% increase in profits and an 8% bump in stock performance. When it comes to early stage companies, so that's the data in the female CFO space is actually publicly traded entities. And then when it comes to new companies, founding teams that have at least one female on the team have a 63% better opportunity to outperform over a 10-year period. You come to high finance, alternative assets in the form of hedge funds. Even there too, where we don't expect women women risk takers to be successful, women or gender diverse teams actually outperform in the larger hedge fund space by a margin of about 6%. We also know that if you are thinking about the debt space, female portfolios of debt that is extended to female business owners, for instance, in the medium and small and medium size areas of economies, and that is in most places the engine of employment. You actually have lower NPLs, you have lower non-performing assets in those portfolios where you have women. So they're better debt payers as well. And we just wanted to give you a flavor of the fact that the data that we looked at was across asset classes, across sectors, and it bore out that gender diverse teams traditionally outperform. Over to you, Ruth.
So what are when we say a gender analysis or gender focused investing, what does that mean? And certainly this is a reflection of what we saw in the literature, but also what we're recommending for those investors who want to capitalize on this edge. I mean, we call it the XX edge because we do think that it's a financial advantage in the markets. And what it means is, for instance, If you're looking at your own personal portfolio, or you're on an investment committee for some sort of institutional investor, you're looking at the composition of boards. And this is something that we've been talking about for a while. How many women are on the boards of public companies? Certainly you want to see at least 30%. Also, how many women are on the senior executive team for companies that you're investing in the C-suites? You want to look at the number of women who are in the are fund managers. So whether it's a mutual fund or some sort of venture fund, look at how many, the percentage of women who are sharing in the asset allocation responsibilities. If you're on an investment committee, look around you and see how many women are in that group, and it has to be more than just one. Also, if you're investing in early stage companies, look to see, it doesn't necessarily have to be the CEO, but you should be screening to make sure that there's gender diversity in the founding teams and in the senior teams of those new companies. So that's one way that you can use a gender analysis. Also, in the book, we give a lot of examples of where market opportunities are missed because a gender product analysis is not performed. So one of the classic examples is with crash test dummies, where in designing car safety, they used a prototype male body in order to design airbags and seatbelts and head restraints. And by not taking into consideration how women's bodies are impacted by a car crash, there was a huge loss of revenue, and obviously safety was impacted, and more women disproportionately died because of it. And so you need to be screening whatever the product and services that you're investing in, making sure that the products are taking women into consideration. And that often should mean that women are on the innovation design teams as well. Another thing we talk about in the book is to do a gender analysis on the geographic locations that you're investing in. Gender contributes to government stability, and certainly around the world, we see difference in performance and difference in economies that can actually be tracked back to legal rights and land ownership rights for women in those economies. And isn't it interesting that in the United States, we're approaching a time when our states are going to diverge significantly in their healthcare laws? And what is the impact that that's going to have on the economy of those individual states? So if you're making a decision about whether it's a municipal bond or a company whose headquarters are in a state where they don't provide full healthcare services to their employees, I would think twice about that, because there's no question that the stability of both the local, state, and national government really contributes to the market performance of those entities. And one other thing, and Patience says this so well, is this notion of externalities versus internalities, and that traditionally we've thought about companies being able to, that their internal business is different from what's going on in the rest of the world. But it's clear now that what's going on in the rest of the world with climate change, so much instability in governments, failure to support workforces, that these are missed opportunities that are going to have material risks to the companies that we invest in, to the enterprises that we invest in. And in some cases, it'll be indirect costs where there's going to be destabilization of the workforce, crime or poverty within the communities that these entities operate in. But in many cases, there actually are direct costs directly to the companies themselves. So back to you, Patience.
Yeah. So one of the things that we wanted to do with this book was to provide a bit of a roadmap to how we see the world, how it could be if investors, if asset allocators, if folks who have decision-making capacity decided to put in place this full potential paradigm. So we have a section that we call the what if section, and in there Ruth and I had so much fun writing all the things that we would want to see, a world would want to see. But then in addition to that, in the last part of the book, we just talk about what are the things that you can do that are, the 8 things that any one of us can look to do. And we say that if you are an asset owner an investor, you should think about investing in and through women. So it's not just investing in their enterprises, but also leveraging them as asset allocators, because asset allocation that is informed by diverse voices offers differentiated opportunities, and over time actually makes you much more money and is likely to have better outcomes on a social on our society as well. We also think that it is important to hire more women, and not just at the lower levels, but across all the leadership spectrum of companies. We believe that mentoring women is really important. We have the excuse out there that when folks say that there's no female leadership in their companies, they usually say we can't find them. And our view is, well, you can't find them because you're not mentoring them, you're not growing them. You as an institution should also take on the opportunity and the responsibility to grow them. And that goes down to individuals, individual people like those in this room who have leadership in the different entities that where you all influence, taking on that responsibility to actually grow the talent that you want to have as part of the leadership. And then we also say, promote more women from within. If you cannot find the talent externally, if you mentor them, you have the opportunity to then promote them into the roles that you want them to take. But it is really important, if you want your organization to have resilience, to have take advantage of differentiated opportunities, and to acknowledge that externalities are no longer that. They really are part of what a business is, to what an organization is to be thoughtful about. Then we say these are some of the things you should do. Ruth, maybe I'll ask you to cover the last one.
I touched on designing for women, and this is not just femtech or women's health. It's all products and services. Women are make almost 85% of the consumer decisions in the United States. They're the ones who are in the next generation are going to have the bulk of the wealth in the world, not just in the United States. And so you need to be thinking about what you're investing in and whether or not they're taking the female markets into consideration and having women on the design teams. Voting for women, whether it's local, state, national, or certainly as shareholders, we need to vote our proxies. And listening to women, you can't just have one woman in the room and expect to really harness the power of that diversity. You need to have, research says, at least 30% in any group, and to tell your friends. So buying the book, telling your friends, both actively demonstrating these sorts of behaviors, but also talking about it. And a couple things I just want to make sure to reinforce. One is that, and this came out in the article as well, that these strategies this is not a replacement strategy. We don't expect that by increasing the number of women in financial decision-making doesn't have to mean decreasing the number of men. That what we're really driving for, and I think the evidence plays this out, is that when you include more women, when you pull more seats up to the table, you actually grow the economic pie and you make more opportunities for everybody. So you don't have to replace anybody. You can add seats and grow the economy and make the room for everyone.